What's going on, guys? Welcome back to another video here on my channel. Today what we're going to be taking a look at is exactly how you go about trading breakouts for stocks. Now, of course, it always comes down and depends on what stock you're watching and whether or not that stock is actually meant to have a good move on the day. That in itself is a big portion of the battle, at least picking the correct stock on the day. That's a big portion of the battle. We're not going to be covering that here in this video, but what we are going to be talking about is exactly how you go about trading some of these high of day breakouts or just simply trading breakouts on these stocks. So right now, this stock we're looking at is currently up over 100% on positive news for the day. So really what we're looking for is what we call a short squeeze. We can't go into the full details of what that is, but just know a short squeeze is basically when you have participants on a certain stock and they're betting it's going to go down. And when they're wrong, they actually cause the stock to go up very, very aggressively. A lot of times short sellers or short squeezes are those really big moves that you see on most penny stocks. The arrow we have here is pointing to the high of day resistance. So essentially this is just the highest point that the stock has been all day so far. And that can be a good area to look at for the stock to break above and then have a good run. The second arrow is pointing to what we would call a short-term resistance. Though we have the high of day mark as the major resistance, you also have these small little points in between or below high of day that are also resistance marks. Normally in a situation like this, the start of the big move will happen as that little point that I've pointed to with the second arrow breaks over. And as you can see there in the text, the short-term resistance move will first start over the break of the short-term resistance. So what we're going to be looking to do is place a limit buy order just over the breakout level. So you'll see me do this here. And really the main point or doing exactly what I'm doing here in this video is putting in a stop limit buy. What that's going to do is it's not going to fill my shares, or I'm not going to get filled these 1,000 shares until the price actually touches my specified buy point. And the goal of using this type of order is that we anticipate the stock is going to break out and we don't want to get filled unless we feel that we are in fact right about to break out. So this can keep us from buying a stock too early and getting faked out and it's not actually breaking out. So the main goal of this is to put in a certain price where you feel the stock is going to break out or start having a good move. That way you don't get filled before that price point. So it looks like we're getting ready to short squeeze out and the stock is getting pretty close to breaking out within this short-term resistance. Now, normally what you're going to see is you're going to see stocks in this particular situation and really in any situation when they break out or when they have a move and they have yet to actually get through the high of day mark, they will normally not break through that high when they first approach it. They will most likely hit it, maybe get through just barely, maybe stay just below, and usually hang out there for a little bit or pull back almost immediately. It's very rare that you're ever going to see it actually break out. And as you can see, I just sold 700 shares of the position. And that's because we have really just gotten very close to that high of day mark, or we're starting to enter into that high of day location where we know sellers will be located. So I've chosen to sell 700 shares of that position as the stock is moving up, and I'm selling into the strength of that move. We know that as those candles are going up, there are buyers, which will help us sell our position faster. Whenever you have a really big cup shape or a really big U shape on a stock and it pushes up to the high of day mark as you're seeing here on ITCI, you first look and always think cup and handle. Never think double top, always think cup and handle first. If cup and handle fails, then you can start looking or kind of playing on the idea of it maybe being a double top formation or pattern. But remember, a double top usually takes the form of a M, the letter M, and this is in the form of a U. So your first thing to do, once of course the stock reaches the high of day, is to start thinking about the potential future outcome, which in this scenario, the best first potential future outcome to potentially look at would be a cup and handle. So in a second here, you're going to see me draw on the screen a couple green lines. What I'm doing is I'm marking off the short-term support that we would want to see the price or this stock really kind of hold over and or kind of just defend to keep us in that cup and handle formation. See, right now we have the cup, but we don't yet have the handle. When we get the handle and the handle starts to break up, that is when we will most likely get a breakout, if it does in fact happen. But again, those green levels that I just pointed out, they're there to mark off the short-term support for the stock. And if the stock is in fact going to perform the cup and handle formation I believe it is going to, then we would need to see that stock stay above those green levels that I just pointed out or put on the chart. That would be ideal. Doesn't have to, but if it does stay above those levels or very close in that price point, there's a good chance that we will see the cup and handle formation play out. So what we're going to do is we're going to place another buy stop order just over the highs, same as we did previously, because so far the stock is holding up really well towards these highs. I mean, you got to think, if this was true resistance, this high of day mark around $20 or $28.60, if it were in fact resistance, it would have probably already sold down. So we're going to put a buy stop order here, anticipating we're actually going to break out. So the breakout's starting, and now we're getting filled. We're trying to break up, kind of struggling. Yeah. So what you're seeing here is a very common scenario where you look for a secondary breakout or continuation in the stock, and you buy for the high of day breakout. And next thing you know, the stock comes down and you start to sell your position thinking, oh, well, this is in fact resistance and it's going to come down, which is a good way to think, because a lot of times if the stock does in fact break over the high of day mark and then come right back down as you're seeing, usually we are in fact going to kind of like double top and in fact come back down on the day. That's in most cases. But in this case, look at how that red candle gets bought up very quickly. You see how aggressive it was coming down and then instantly gets bought right back up? That is a sign that buyers are coming in on the bottom of that candle. Even with how scary it looked, buyers are still coming in on the bottom of that red candle and they are buying it up. That right there is definitely a sign of bullishness. Even on a red candle, you can have bullishness. So right now, again, the stock is just fighting below that high day mark. So this is great. Even though we're in and we're not quite breaking out just yet, the important takeaway is that look at how the price is just sitting below the high of day mark. We've had a couple red candles down, but ultimately that price is still kind of pushing up towards that high of day mark. It's not selling off. You have to remember that stocks sell down 70% faster than they go up. So many times when you go to buy the bounce on a stock or buy the bottom as something was going down, it will usually take a little bit longer for it to go up or reverse because stocks go up, again, 70% slower than they come down. So a lot of times when a stock reaches a top, if it's truly a top, it will normally pick the direction down and move down pretty quick. But yet we're still holding up near these highs. So you got to think, if this was true resistance, people would be getting scared and they would be selling out, which would probably cause the thing to drop. But people are not yet fully scared and they're still buying this thing up right at the high of day and at resistance. This is a good sign that we can be breaking out. So I'm going to go ahead and place another buy order just over the high of day. And the reason I'm going to go over the high of day here now is because, for one, I still think the stock is bullish with the way it's holding up, and I do think we'll break out. But second, we've already seen the stock get over the first initial high of day price at around 28.68, I believe, that red dotted line. We've already seen it get over that and come right back down and under. So I want to be a little bit safer on my next purchase after seeing the way that happened. We're going to put our order just over the high of day mark. Because the chances are, if this gets back up over high a day, it is going to break out this time. Something to also notate here is if you look at pretty much every single candle from once we first reach high a day, almost every single candle is still uptrending. Even though the candles may have dropped down below the previous candles, ultimately almost every single one is still uptrending. Now, my most common technique that I use when I'm in a trade is once I get in or I'm filled and I'm already long on the stock, or maybe the stock is just about to break out and I get long, what I'm going to do is I am going to usually sell half or 70% of my position as the stock is going up. Because again, you don't want to wait too long to take profits on your trades, and you want to get in the habit of taking profits, respectfully as the stock is moving up. I'm not saying to take profits immediately as soon as you go green, because again, then you could lead you to not getting some of the big move. So again, it's always good to get in the habit of taking some of the profits off just as the stock is breaking out or it's had its really good move, because that is usually the most predictable move, or that is usually the most predictable part of the move, is the breakout and the first initial jump right after we break out. Anything that happens afterwards becomes a little bit harder to predict. So it's always a good idea to take some of your money off the table on the easiest part of the move to predict. Something very important to pay attention to is the fact that look at the selling volume. Again, look at how we were kind of holding just below the high a day, and look at how much selling was just taking place, and the stock still isn't going down. That tells us somebody is buying up all the shares that people are trying to sell, or there is a big buyer here, or enough people all willing to keep buying this to keep this stock from going down. That's a good sign we're going to break out. Looks like it's going to break out right about now. You can kind of see we kind of create that little mini flag, and we're curling up now. Yeah, we're going to break out. This is where you're starting to see a lot of people starting to buy, because now people have the confidence this is going to break out. This looks like a breaking out move. Now you're getting all the buyers to come in, and we are already ready for the move. See how it kind of stopped just below the high day mark? That's why we're keeping it just over. And now we're breaking out. This is a time when you should tell yourself that this has strength and you can be willing to hold this a little bit longer. Think about how long we just held below the high a day, but think about how well we stayed up at the high a day mark. We know people were selling short at high a day. We know there are short sellers to squeeze out. We know that this is breaking out. This is a comfortable time where we can say it's safer to hold it for just a little longer and see how this plays out. Because if it wanted to sell down or it wanted to go down, it would have most likely done it when it tried to in the first place. Yet it failed and the buyers came up and started buying it up. Now look at the buying volume on the stock. The buying volume is increasing significantly over the previous red selling bars. And the buying volume is actually trending higher as the stock is moving up. That's a good indication that we're going to have follow through to the upside. Now look at this red candle. You may be thinking to yourself, oh, should I sell? Was it going to come down? Look at the volume, right? Nobody is selling that candle. Every time it goes red, it goes back to green. And you can already see that no one is selling that candle. There's not a lot of volume taking place on that pullback candle. That's a good sign that not many people are selling it. And it's going to continue moving higher. Now that the candle's picking direction, as people thought it would, you're seeing the volume increase. But beforehand, it was kind of just staying on standby. I'm going to start selling some shares here just because we've had a really good move, and this was a pretty predictable outcome for how we were situated. This is a spot where I would feel comfortable taking some shares just because we've had a great move, and this is a very predictable outcome for what the stock and how the stock was situated. Once again, look at the selling volume on this candle. Really not that much. And also notice how the candle is still staying up towards the high of the previous green. The red candle hasn't even broken the low of the previous green candle's body. That's how bullish that candle was. It's just sitting right at the top of that previous green candle, not selling down. Still very bullish. Now I'm going to start decreasing my position by about half. So right now I have 450 shares, and as we're moving up, what I'm going to start doing is kind of cutting that position in half. What this is going to allow me to do is lock in more profit on the move up, and then also keep some shares. That way, if it does continue higher, I'll keep making a little bit of more money at a time. Sure, I'll be making less and less money as if I were to hold the whole position, but this way I get to play, smart and effective. I get to keep locking in profits, yet still keep being able to ride that price up. Now you can see I'm downsizing my position by 100 shares. Each time we go up, I make more money and I sell a little bit more. This is allowing me to decrease my position size or decrease my overall risk on the stock or leverage, so that way I'm slowly locking in profit and I'm decreasing my risk. Now that I've gotten down to 150 shares, I'm up $3,400 profit on the trade, and I still have $400 green open P&L. This is a situation where I can say to myself, I've already made a decent amount of money on the day. Sure, I could sell now, lock the 500 in, but I can just put a stop loss for the remainder of my shares below the most significant or most recent significant buying point. So what you see me do is I'm placing a stop loss just about below $28 because that is where the significant buying of that stock took place and we had this really big move. That tells us that a bunch of buyers were coming in there, and that is most likely going to be the support level. And then if you look down at the volume, again, that was pretty much some of the highest trading volume on the day, or a big cluster of some of the highest trading volume. So we know a lot of market participants were located right at about 28. So again, it's a good idea to place a stop just below that $28 mark and try and let these shares ride. Because again, if the stock is in fact going to break down on the day, when it comes back down to 28, it will most likely bounce there first and hold that support. And then from there, you can determine if you would like to continue holding or not. Alright guys, that's all I have for you on this video. I hope you guys learned something new today. I hope this video really helped you guys. As always, I do appreciate you guys tuning in. And if you can, please do hit the thumbs up button. That really does help grow our channel and get our reach out to more viewers. And as always guys, subscribe so you don't miss out on the next video. Take care, and I will see you guys on the next video.